Hello traders and welcome to another video review. Today is Wednesday, March 20th, 2024. Let's take a look at the Forex economic calendar for today. As you can see, I got only the medium and very important data releases for today. You can see that the CPI data from the UK was one of the most important data releases for today. CPI completely were completely below the expectations, surprised the market participants. The actual number is 3.4, forecast was 3.5, last one was 4%. The PPI input was the same situation, so generally we will take a look at the British pound later on. German PPI released already minus 0.4%, worse than forecast, worse than previous reading. We still have some comments from the President Lagarde and Lane and Schneibel from the Eurozone, respectively at 10:15, 10:30, and 3 o'clock. Crude oil inventories from the US are scheduled for release at 3:30. And this is one of the most important events of the day. Then we got the German Bund speech at 4:30, and then 5:45 we got the German Bund President Joachim Nagel to give a speech. The most anticipated event of today is, of course, the Fed interest rate decision. The market participants expect the Fed to leave the interest rate at the level of 5.5% as before. Of course, together with the interest rate decision, we got the FOMC economic projections, FOMC statement, and 30 minutes later, we will start the FOMC press conference. At 11:15, the last very important event of the day, the GDP from the New Zealand is scheduled for release. Market participants expect a hike from minus 0.3% to 0.1%. So, key event of the day, FOMC and crude oil inventories and CPI from the UK. We got it covered. So the analysis will be done in a minute. But first, the most violent market in the crypto, which means Bitcoin. The Bitcoin has been seen moving lower towards the level of 59,172 after the technical support located at 64,369 had been violated. So these two green lines will now switch the colors to the red. So let me just switch it very briefly. There you go. So this is now technical resistance. We are trading below 150 periods moving average on the 4-hour chart. Moreover, we are having the bearish cross, which is of course the 50 periods moving average crossing the 100 period moving average. Local low so far was made at the level of 60,745, so we should wait for the bounce a little bit higher. As you can see, the market is bouncing right now, but as long as we trade below the technical resistance, we cannot say anything about the condition of the bullish eventual bullish trend resumption. So right now the overall movement to the downside is roughly around minus 18%, almost minus 18%. So please keep an eye on the technical resistance as the bulls are trying to bounce from the extremely oversold market conditions. This movement to the downside is in 3 waves, so we might see some sort of the profit taking from the bearish side and maybe some kind of a bigger bounce towards 65,000 level. Might be in progress. So this is the Bitcoin, of course, because of the US FOMC interest rate conference, and we will have to take a look at the US dollar index. So what is the US dollar index doing is gaining ground all across the board. Since the low of the 102.33, we can see a steady growth above 150 periods moving average, now even above the yesterday's high located at 104.03, and we are approaching the technical level seen at the level of 104.26. This is the technical resistance. Of course, there is some sort of the zone made by the two technical resistances here, 104.19, 104.26. So there is a not even 10 pip zone. In a case of the breakout higher, the next target for bulls is located at 104.95. Okay, so that's the situation here, and of course we can see the breakout above the trend line. If we can do the some short-term trend line on the chart, we can see that we broke above this trend line. Now we continue to go higher, so it looks like the bulls are in charge of this market, despite the fact that the market should come off the extremely overbought conditions right now. The momentum is strong, the momentum is very dynamic. It's of course positive. Bulls are in control of the US dollar index. We should see some deterioration all across the other markets. So let's start with the British pound to see what was the reaction for the news, right? So we got the CPI data. As you can see, we bounced from the lows of the potential wave C. So the low was made at the level of 1.2666. We bounced towards the 100 periods moving average, but then again we were rejected from the 100 period moving average on the 4-hour chart. Now the rejection deteriorates, and the next target for the bears is of course yesterday's low, located at 1.2666. Momentum is weak, momentum is negative, bears are in charge of this market, so possibly this ABC correction will turn into the 1, 2, 3, maybe 4, maybe 5 wave, impulsive wave to the downside. So please stay with this count for now. With this scenario, if we break below yesterday's low, the next target is located at 1.2599, where the next technical support is. And last but not least, let's take a look at the crude oil, because we got the crude oil data today. Let me just switch to the daily time frame chart to see the bigger picture for the crude oil. And I'm doing this because yesterday we got, as you can see, very nice candle here, shooting star candle at the end of the up move, right? So that's the yesterday daily candle. And what we need right now to confirm that this up move here might be completed or is about to be completed is the confirmation to the downside. So if there is any red candle to the downside today, of course that would mean that we get the confirmation. So the market will be ready to retrace a little bit here on the crude oil. So from the technical point of view, the next technical support is 180.84. Right, eventually is 79.92. Nevertheless, it still looks very bullish to me. This might be only a pause in the overall sentiment. This might be over a temporary pullback as the market is knocking to the extremely overbought conditions. Let me just zoom out a little bit one more time. So what do you see here right now is maybe not that much impulsive scenario, because there's too many waves overlapping. Nevertheless, the market keeps trying to gain more ground, and right now the market went to the upside in let me just take a look. The price range from the lows of the December to this year's high, 23, almost 24%, right? So since the lows of the December, the middle of the December 2023 to the yesterday's high, we gained 24% in not even 3 months. So that's a very positive number for the bulls, very positive result. If the market wants to continue this kind of a movement, it cannot break below 80.84, 79.79 technical support zone, as the uptrend and as the positive momentum would then continue, and the bulls then would target the level of 90.86, which is the high from the October 2023. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.